Okay, good day everybody. Welcome to another video on trading setup, our live stream, weekly live stream. And today we're going to be discussing Bollinger Bands. We're going to look at some strategies to trade with Bollinger Bands. I'm going to give you guys a quick rundown of what they are, what they show you, and how to use them effectively. If you guys have any questions while we're doing the stream, please feel free to ask. Best time to do this. We'll get those questions answered in real time. I can see the chat running, so please ask and we'll try to sort it out. Okay, let's have a look at Bollinger Bands, and we're going to mainly be looking at two strategies today to use Bollinger Bands, but there are others as well. We can likely touch on those as well. Let's go to our platform and have a look and see what these look like. Okay, we're going to add the Bollinger Bands first to our chart, and that's the way it looks like default on Pocket Option. I'm definitely going to make some changes to it. First changes I'm going to do is do a change style. I like to have them all the same color, and we can get rid of the background. Okay, looks a little bit better. Now we're going to change some inputs. First thing we're going to do is change our deviation to 2. This is the standard, and by default, usually the Bollinger Bands will be set to a period of 20. I like using them on a period of on a 14 period, especially on the shorter time frames. When I'm looking at 1 hour, 4 hour charts, then I'll look at a 20 period Bollinger Bands. But on the very short time frames, like 1 minute or 10 seconds or even 5 minutes, I prefer to have it on set to a 14 period. Okay, so let's have a look at what this Bollinger Bands look like. So we can see that after we've added the Bollinger Bands to our chart, we've got 3 lines on displayed over our chart, overlaid. And these are the upper Bollinger Band, which is the line that's running at the top. We've got the middle band and the bottom band. So the middle band is essentially a moving average of the period that we set. In this case, it's a 14 period. We can check this as well by adding a moving average to our chart. And if we make it nice and thick, we can see that should we change this to 14, this will completely overlay our Bollinger Bands. So the Bollinger Band middle line is just a moving average, nothing else. It's a simple moving average. The upper and lower bands are calculated off the moving average and using the closing and opening prices of the candles, depending on which band is being calculated. And then the deviation is the distance they are apart from each other. So we can see if we change this to 1, we can see that these lines contract quite a bit. So the default is a 2 deviation. You can play around with it. I'll show you guys when I'm trading on 10 seconds. I usually change it to, again, I don't use 2 when I'm trading on 10 seconds, but we'll get to that in a little bit later. So we have the Bollinger Bands, and the first thing you will notice when looking at the chart with these Bollinger Bands overlaid, you will see that these bands open up and contract all the time. So we've got this contraction area here, and then it's opening up again. We've got these bands bulging and closing. Let's see if we can find maybe an asset where this is a lot more visible. Okay, it looks like we're not going to find an asset where it's... Oh, there we go. We have these areas at times when the Bollinger Bands contract, and sometimes they contract quite a bit. That's going to be one of the strategies we'll be looking at. But sometimes they contract quite a bit and then they start opening up again. What this means is when the Bollinger Bands are contracting, price is in a period of very low volatility. So the closer the bands come to each other, the lower the price volatility compared to the previous candles that you selected. So in our case, on this chart, it's going to be 14 candles. And the more the bands open up and move away from each other, the more volatile price is becoming relative to the last candles in your period. And again, which in this case, we're using a 14 period. So it's less, it's becoming more volatile than the last 14 candles. And as long as these bands are opening up, the volatility is increasing, and while these bands are closing in on each other, the volatility is decreasing. Okay, so one of the common ways that people like to use the Bollinger Bands is when you use especially a 2 deviation, is when price starts moving out of the Bollinger Bands or the upper and lower bands, people start taking that as possible signs that price might be overextended and start pulling back at any time. This doesn't mean that as soon as price gets out of the bands, you can take a reversal position. That is very often will happen, will end badly. As we can see here, this candle pushed out. Basically, half the body was out of the candle here, but price continued its way upwards. So we cannot simply say that because the Bollinger Bands are out of or has pierced the upper or lower bands, or no, we can't say that because price has pierced the upper and lower bands, we're going to see a reversal coming. But it is a warning sign. We do have, it tells you need to pay attention and have a look at some other indicators or at the rest of your strategy, whatever you're using, to see if this is the case or not. Okay, so that's one of the ways it's commonly used. Another thing that's very commonly used is, I'm going to go to Euro USD here. One of my favorite things to trade is called the Bollinger Squeeze. So the squeeze happens when these lines, when the upper and the lower line start moving together, and they come together and they stay close to each other for a few candles. It doesn't happen often. So even on a 1 minute chart, there could be a day that you will not see a Bollinger Band squeeze on an asset, but they do occur. This is kind of an example, but this is not a great example of it. Let's see if we can find a Bollinger Band squeeze somewhere and see what it looks like. So the idea behind the squeeze is that when price starts when the Bollinger Band starts contracting, it's building pressure. So the longer the squeeze duration, the higher the pressure that's being built. And then when the squeeze pops, this will be these massive candles. This is an example, not quite, this is not a very decent squeeze, but this will show us the idea in any case. If we take the previous movement, we can see that these bands have contracted and they didn't open up. They were basically running parallel to each other for quite some time. And then when it broke, we can see that these bands are opening up enormously. This will be a sell indicator or a sell signal. When you see a squeeze like this, the longer the squeeze, as soon as the squeeze breaks, if it breaks to the upper side, we'll go with the buy, and if it breaks to the bottom side, we'll go with the sell. And this is kind of what it looks like once it breaks. But like I said, I'm struggling now to find a really good example of a Bollinger Band squeeze. Usually, it will be a very, very tight squeeze, and when it starts opening up, you can basically just take a trade in the direction that it's breaking. That's the Bollinger Band squeeze. It is a very popular signal that people use. Again, like I said, the Bollinger Band, you won't see a squeeze every day. Even if you're looking at a bunch of assets, it doesn't necessarily mean that you will see a squeeze on a daily basis. They occur, but they are very rare. Fairly rare. I wouldn't say very rare. It's not like you can see one in a month, but you can't also expect to see one every day. I would really love to get a decent squeeze image of a decent example of a Bollinger Band squeeze. I've been searching earlier, but I've been struggling to find a very good example. Let's look at a 15-minute chart, maybe. They are very distinct. If you look at the if you're scrolling through the Bollinger Bands like this, you will find a area where there's just like, it's like a narrow tunnel, and they are very, very distinct. Basically cannot miss them. Okay, I'm not going to waste too much time dwelling on hoping to find an example. We're going to be doing some trading, and hopefully we'll find an example while we're doing that as well. Let's get back. Okay, so like I said, the one strategy that's very popular is the Bollinger Band squeeze. I've also always got Bollinger Bands on my chart when I'm trading, and that's one of the specific things I'm watching for. Another strategy that I use fairly often, but again, this is not something you're going to see quite often, is when we have price moving in a bubble. Let's go back to Euro USD. It usually gives me good entries. When we have price moving in a bubble, when we have the Bollinger Bands making a bubble, a period of high volatility, and they start contracting. When they start contracting and price is running on one of the sides of the Bollinger Bands, like in this example here, we can see these bands were opening up, and we can see that price is running on the inside the upper band for the whole duration of this upwards move. If I see a sudden switch over, like we had here, price comes back, or price turns around and comes straight through the middle line and hits the bottom line. While these lines are still contracting, that's one of my favorite entries to take. As soon as price gets out of that line, I will take a trade for the candle period. So I'll take a position for the current candle period. That means if I'm on a 1-minute chart, I will be taking a 1-minute trade, and if I'm on a 5-minute chart, I'll be taking a 5-minute trade on options. So we can see in this case, when price hit these Bollinger Bands, when they were these were still closing, we can see these bands were closing and they were not opening up by the time that price hit the bottom band, coming all the way from the top band. And as soon as price moved outside of the Bollinger Bands, I would have taken a buy on this 1-minute buy, and there we go. Again, like I said, this is a slow strategy. You're not going to see this often. Once or twice a day on a 1-minute chart, maybe. So by the looks of it, it's 4 o'clock my local time, and it's the only one that I've seen since. I don't think this asset or Euro USD had another signal like that since this morning. We are on 9 o'clock already. Okay, so in this example, price was moving in the upper band, came all the way down, but by the time price hit the bottom band, the Bollinger Bands were already opening up, and that's not where we're going to take an entry. We don't want to trade like that. We want to wait. We want price to hit the opposite band while they're still busy closing. Okay, that's strategy number 2. And then strategy number 3 is one of my favorite ways to trade while I'm on on 10 seconds. I love trading 10-second candles. For this, we're going to need 2 indicators. Let's add that to our chart quickly. Okay, so we've got the ADX and we've got the Bollinger Bands. The ADX shows us is considered a momentum indicator, but the DI plus and the DI minus, which are the red and green lines here, I've changed them now, but from default, but it's the red and the green lines. These represent the rate of change. So it shows you how quickly a price is changing. So when we have the ADX, and the ADX value itself is fairly low, relatively low compared to normal movements or whatever you can see on the chart. The ADX shows a strength. I did a video on the ADX. You guys can go watch it if you haven't seen it. I think I did 2 videos on the ADX, how I trade with it. So while the ADX is fairly low and we have a massive DI spike, whether it's a red spike or a green spike, that tells us that this is a very sharp and very volatile move, but it's an empty move. There's not a lot of strength behind it, and there's a very decent chance that the price could actually turn back immediately. And when price gets out of the Bollinger Bands like this is, like I said, this is what I use on 10 seconds. When price gets out of the Bollinger Bands like this was a beautiful sell opportunity. If I took a 1-minute sell on any of those 2 candles there on this decent spike on the ADX, that would have been a profitable trade. We can see if we can find an entry or 2, but for, finding entries with Bollinger Bands is a little on the difficult side. To look specifically in a short period of time, to look specifically for an entry, but we can jump through a few assets. We can see if we can find some. Let's see. We had this decent DI spike here, price outside of the Bollinger Bands, and 1-minute sell. So this is basically what I want to see. Again, we have price moving outside of the Bollinger Bands. The DI was fairly high here. I don't like the way it looked. This was not a clean spike coming from a low area. The DI was already low, just made a little pullback. The ideal positions or spikes like these are nice. If the DI is coming from the bottom side, it's always lovely to see a decent spike. Looks like this is going to burn me. Maybe not. Okay, it was being a little bit stubborn there for a second. Good trade. So when the Bollinger Bands get out of, when price gets out of the Bollinger Bands, and my ADX is telling me that this is showing me a DI spike, telling me that this is a big rate of change. It's a massive jump, but the ADX is low. There's no momentum behind this. There's no buyers coming in. Usually, those moves tend to pull back, and if I'm trading options, a minute or so is enough for me to catch that pullback. It doesn't mean that price will necessarily reverse. So keep that in mind as well. It doesn't mean that price will reverse if price gets outside of the Bollinger Bands. But it does mean that there is a chance for me to catch a pullback over the next minute or so. Usually when you get a big DI spike on the ADX, it pulls back for a little bit. Most of the time. Okay, so there's some those are 3 strategies that I use for the Bollinger Bands. I do not use the Bollinger Bands in any other way. Those are the 3 ways that I use the Bollinger Bands. And like I said, I look for the crossover, and we look for the squeezes, and then the ADX spikes, combining them with ADX spikes. But you can combine the Bollinger Bands with other indicators as well. A lot of indicators work very, very well with the Bollinger Bands. Interestingly enough, I think while we're doing this, we might as well look at the Bollinger Band width. Let's make this 14 as well. This indicator is just a visual representation of the distance the bands are, the upper and lower band are from each other. So you'll see we've got them both set to 14 period. Bands were opening up here, and we can see that they were opening up on this spike here on the Bollinger Band width, and when they were closing together, we can see this, that they're not far apart. We can see that the width indicator is showing us that it's not far apart. So the higher it is, the further the upper and lower Bollinger Band are from each other, and the lower it is, the closer they are to each other. This is directly derived from the Bollinger Bands themselves. So it is useful in the sense that if you are unsure whether or not the bands are opening up, sometimes the bands behave in a way that it's difficult to gauge, like this. It's difficult to gauge where they are opening up, if they're really opening up or if they're running parallel to each other. And that's where this comes in handy. This the width indicator actually comes in handy there. And then for the squeezes, we will be able to pick up a Bollinger Band squeeze on the Bollinger Band width indicator as well. What we need is an area where this indicator is very, very low and just flatlining. When that happens, we know we have a squeeze on our hands. Something like this. You can see how low this is compared to the other movements before. Just move this mic a little bit so I can see that. We have this area here, and then as soon as it broke, we can see that the Bollinger Band width is opening up. We can see that the band started opening up here, and there was a sell opportunity. Although these two lines were a little bit far from each other, not quite what I would like to see on a squeeze. Let's see if we've maybe find a squeeze on the 10 seconds. Kind of a squeeze there. We can see how it's flatlining, but it's not. It's not super tight. This is more. When I'm talking about a squeeze, if we look at the average width here of the Bollinger Bands, all of a sudden these contracted quite a bit. That's what a squeeze looks like. We are on a 10-second chart though. I would not recommend playing squeezes on 10-second charts. 1 minute, maybe 5 minutes and upwards, absolutely. Especially for Forex. I do a lot of Forex trades on with the Bollinger Band squeeze when I see it form. You just wait for it to break, and when it breaks, you just go with the direction of the break. In this case, it would have been a bad one because it started breaking upwards and then dropped. But like I said, trading a squeeze on a 10-second chart is risky. It's very, very risky. But this is what a squeeze looks like. Bands contracting super, super tightly, stay together, and then it starts opening up again. Basically the squeeze pops, and when this happens, price tends to run in the direction of the break. We can see this as well. This is more or less what a decent squeeze looks like. Bands are still not a bit too far away from each other here in this period here to be considered a proper squeeze, but we can see how it broke, and then price just started dropping. Now on a 10-second chart, this is super quick, and it's really, really difficult to follow. I do not look for squeezes when I'm trading on a 10-second chart. But if you are on a 1 minute or 5 minute chart, 5 minute or 1 hour chart, or maybe a 15-minute chart, and you see this happening, you can just get in and go along with it. Lots of time, it's a slow process. So you don't need to. You can wait for the confirmation and still catch a lot of the movement. But yeah. Okay, so if anybody has any questions on Bollinger Bands, on the way we use the strategies, please ask now. It's the best time, again, it's the best time to get these questions. I would love for you guys to, especially the people, if you're already in the Telegram group, come join us. Come join us with the live streams. We can have a chat. It doesn't happen often that we can communicate live in real time while watching charts. We have the charts open. If there's a question on it, let's ask it. We discuss different indicators and different strategies during the live streams, but other questions are welcome as well. Okay, and if you're not in our Telegram group, details are below the video. It's 100% free. Come join us. Jump in. We have 3 trading sessions every day, and yeah, we discuss lots of valuable information as well. So come join us. There's no catch. It is 100% free to join. Okay, so no questions in that case. Thank you guys for watching. This has been Bollinger Bands, 3 strategies we can use on the Bollinger Bands. 3 strategies that I use every day when I'm trading. We've got the Bollinger Band squeeze. If you're still not sure about it, have a quick Google. You'll find lots of beautiful images on perfect examples. The squeeze doesn't always play out perfectly while you're sitting in front of the charts. But as long as you can understand the concept of it, it is a very good strategy to use. But like I said, it's extremely slow. And then we've got the changeover from the upper to lower or lower to upper while the bands are still closing. And that's one of the strategies I use daily on the 1-minute chart. If I see that happening, I don't think about it even. I simply take the trade. And then on the 10 seconds, especially, we have the ADX spikes, the DI spikes on the ADX alongside price getting outside of the Bollinger Bands. Although you can use these on higher time frames as well. Just remember, you're going to need a couple of candles for this to play out. So if you're on a 15-minute chart, you're going to be looking at a 1-hour expiry maybe, or something like that. Okay, so just keep that in mind. It's not a single candle strategy. I don't think I have any single candle strategies, except for the Bollinger Bands crossover. But yeah, okay guys, thank you for watching. I'll see you guys next week for another live stream. If there's any topics you guys would like me to discuss, leave a comment and we will get that video made. And if you haven't joined our Telegram group yet, again, links in the description. Come join us, come have a look. Like I said, it's 100% free. We do 3 trading sessions every day. Come see what it's like. Okay, thank you so much for watching. See you guys in the next video, and until then, may the pips be with you.